what do you feel like the future for the rate environment looks like, seeing there's so much pent up anticipation of hopefully lower rates at some point in the near future?
Yeah, well, I mean, I think we've been so focused on bringing rates down for so long. That's first of all still at the forefront of everyone's mind, and then you bring in the impact of a conflict in the Middle East, and we know based on history that is going to impact gas prices for sure. We luckily have a really strong reserve, and we've got a president that is focused on drill baby drill right now, and so that's going to help alleviate a little bit of that pressure. But then furthermore, CPI doesn't take into effect both food products and gas, and so there's going to number one be a little bit of a delayed impact of the increased cost in gas impacting traditional consumer goods that are focused around for the CPI reports, and so that gives us a little bit of time in and of itself. So these next couple of meetings, they're not taking into effect rising gas prices, and consumer products have not seen the impact of those rising gas prices hit their products just yet. So I think it'll be a couple of months before we see that impact, which helps us, especially with the current Fed chair. And then, as we move into, if there is somewhat of a prolonged prolonged conflict in the Middle East, which with Trump's focus so far, we've had a fly in the night demolition of the rockets and the bombs that we suspected Iran being involved with a few months ago. We had another raid in the middle of the night to address a leader in South America that ultimately was captured and brought to American justice in the night in a very short order and swift order. I think with what we've seen of Trump, and knowing that Trump does not want to be involved in a prolonged conflict in the Middle East, we can expect very swift and aggressive approach early on to hopefully bring down the lasting impact. However, if there is prolonged impact in the Middle East from this conflict, housing is going to be a huge focal point. We still have strong unaffordability in the housing market, and so even if we do see inflation of some aspect that impacts the greater U.S. population, then I think Trump's focus is going to stay on bringing down the cost of housing. Because if we can't address inflation in consumer products, we can't have both escalating inflation in consumer products and a lack of affordability in housing as well. We're going to have to address one of the two. And I think inflation is reasonable if it falls in the 3% range. And I know the current Fed chair is pushing, for the low twos. I just don't find that economically feasible at this point. And so the next best thing is to address housing. Housing is out of control, and the cost of housing. And so the fastest way to address that is bringing down interest rates. And so I think that will still be the main focus, at least for the foreseeable future through 2026.
Yeah, I think, just a 5 or 10%, even a 10% increase in oil prices really only impacts inflation about 0.1 to 0.3%. And, seeing that we are still experiencing core inflation around 3%, that's still within the target range. I think the Fed will largely look through that unless there is some sort of prolonged conflict in the Middle East. But I think, in times like this, it's important to maintain a long-term focus. Markets have historically absorbed wars and geopolitical crises. Long-term outcomes, as we've seen, are really driven more by fundamentals than headlines. And it's easy, I think, to be influenced by some of the headlines out there. And we would always recommend avoid emotional investing. You want to plan for the long term and adjust your allocations now in a way that benefits you really for the long run. And that really also includes a tax advantage strategy.